Most business owners spend years focused on one thing: growing their business, getting more customers, getting more products, getting more opportunities, right? That is the goal of most business owners, naturally trying to grow their business, right? It's the ultimate goal. You start with an idea, you grow it eventually so that it escalates to something bigger, right? That's usually the goal, right? And most businesses do this until they realize they made a mistake, okay? And that's that they put everything under one company. Today, I want to talk about one of the most misunderstood concepts in business ownership, and that is the concept of a holding company. I'm sure you've heard this before, hopefully at some time. If you're growing your business, if you start getting assets, and you have spoken to an attorney, if you have spoken to a CPA, you probably have heard of this concept of a holding company. So the goal of this video today is to talk about what they are, what they look to accomplish, what are the tax implications, and most importantly, when they actually make sense, okay? Because like everything else in law, in taxes, in accounting, these things don't necessarily apply to everybody. This is a concept that if used properly, if used correctly, under the right circumstances, it might make sense to you. So today, I wanted to do a deep dive into this concept and how it works, and see if hopefully it's something that might make sense to you. So you may contact your CPA, so you may contact your accountant, and to get more details and try to work something out if the situation calls for, right? So let's start with what most business owners don't see. Okay, so let's start with a very common situation, right? So let's say you're operating a business, and a business that has an operating company, okay? Let's say it has a business equipment, let's say it has cash reserves, let's say it has intellectual property, maybe even a building, right? So these are concepts that apply to a lot of businesses. And from the owner's perspective, it's very simple, right? It's just you just have you have everything under one entity, right? It's the one entity you started with. It's simple. It's comfortable. It's what you know, okay? But then something happens, right? The lawsuit, right? What everybody in this country tries to avoid, a lawsuit. It's something that, unfortunately, here for business owners, is something that we're all exposed to, right? We live in a free society where, it's part of the, let's say it's part of the game, okay? So that's why we need to protect ourselves as business owners, as individuals as well, from having lawsuits, okay? So let's say it could be a creditor issue, it could be an intellectual property dispute, it could be contractual, right? Something's not happy with the contract, someone there's disagreement, it could happen, and then or it could be just an unexpected claim, okay? It happens. Unfortunately, it's part of business, right? So what happens if you have everything under one name? Everything is exposed under the same structure, right? This is where many businesses owners realize that growth and protection are an important part of the business, and they're completely different. And it's a conversation that you need to have with your attorney, and it's a conversation that you need to have with your accountant or your CPA. So let's begin with what is a holding company, okay? The concept that we wanted to start with, okay? So a holding company, it's actually a very simple concept, okay? The primary concept here, the purpose is not to operate a business, okay? So this is where you separate, where you have your ongoing operations, and you separate, and this is where, as part of that separation, this is where the holding company takes place, okay? The purpose is to own things. It's not to operate things. I think this is the probably the most simple way to explain it. So when you think of a holding company, it's not necessarily the one entity where you're actually creating things. It's actually the one that owns certain things. Okay, they could own real estate, they could own equipment, they could own intellectual property, investment, interest in a company. So it's sort of an ownership and slash, it could be active or passive type of income. So this is where it get a little bit nuanced, but just think of it as a structure that is on its own, certain part of the business, right? So meanwhile, the company runs the actual business, right? So you have the separation between the operations and the ownership. Okay, so it serves, because what does the company do, right? The operating company serves customers, it pays employees, signs contracts, generates revenue, right? That's what an operating company does, right? The operating company carries the day to day. This is kind of like the way you think about it, right? It's the one that's keeping the lights on, generating the revenue, keeping up with the expenses. This is the operations of the business, right? The holding company, on the other hand, is what holds the assets. It owns the asset, right? It's a very different job, right? It has different risk. It has a different purpose. And the point here is that we'll get more into it as we have this discussion, but the goal here is to separate, because if you commingle what is the operations of the business with the ownership and you have it all in the same structure, everything is exposed to what we just described earlier, a lawsuit. Okay, so let's get to like a real life example, right? Let's say you're a business owner, right? And you own. Let's go with a construction company. Okay, a simple term. A common type of business, right? It operates. It does construction, whether it's commercial, whether it's residential. It's focused on general construction, right? It has warehouse. It has vehicles. It has equipment, right? All normal part of the operations, right? And let's say that everything is under one company. Very common, okay? Especially as you start the business, right? Because this is where the concept of timing also takes place, right? Because as you start a business, it makes sense to have just one structure, right? Because it might not make sense to have a holding company if there is nothing to hold. But as you start growing, that this is where the situation comes up, right? So imagine that as you have that company, right? Now it's at a point where it can now own things because it scaled, right? It grew. So now not only it operated, not only it's able to have a profit, but it actually has assets that it was able to acquire, right? So let's say everything is under one structure, right? And let's say that a major lawsuit occurs, right? Like I said, sometimes it's even normal part of operations, right? So the risk is limited to the issue, right? To what caused it, right? However, potentially everything owned by that company can have a liability to that lawsuit, okay? So, but let's say let's have a different scenario, right? Let's say a business, the same business, right? It has one operating the business, okay? But it separates another entity owned or a sister company as part of the whole structure, but separated. And this other company, what we're gonna call the holding company, actually owns the building, right? Another entity owns the building, another one owns the equipment. The goal here is it's not really just too complex for the sake of having difficulty. Sometimes I've talked to clients where they might even mention something like, oh, okay, you guys just do this to just because you need to have a job, just to make it complicated for us. But the reality is that if you pay attention to what's going on and really the whole goal here, you understand why we're trying to do this. Like I said, it's not to keep things complex, but it's actually to create the right structure so that you're not exposed, right? Because it's just as simple as this. If you keep it simple, you're gonna be completely exposed to lawsuit. And what you might think that just because you're not putting up with the complexity to get to set this up, you're actually making it very difficult for yourself and exposed to a lawsuit, which can bring headaches, problems, bankruptcy. I mean, the problems can go on and on and on, right? So the goal here is separation, okay? So the idea is that one problem one problem does not absorb what's within that same entity. That's why we separate them. That's why we create a bank account for each other. That's why we create an operating agreement for each other. They're basically two different companies. Now, it doesn't mean that you're gonna be completely outside the ownership. No, it doesn't mean that. You can obviously keep control of the companies. However, they can be separated, okay? And so what about taxes, right? Okay, so yeah, I get the whole holding company. Now, how much are you gonna save me? Okay, so this is where a lot of times this can get mixed up, right? And where a lot of misinformation exists. Because like people often hear the phrase like holding company and immediately they think tax savings. Like I said, how much are you gonna save me? You might go to your CPA or your attorney and be like, okay, so if I spend, all whatever I need to spend on creating a company, on setting up the business formation, on doing the business, the operating agreement, and then having to renew every year, what's the back end kickback or the tax saving I can get from it? So this is a little bit nuanced, right? Because it doesn't mean, the best way to put this is that a holding company doesn't magically reduce taxes, right? If it were that easy, then everybody would do it. Then everybody would just come up, like me and myself, like you yourself, you just go get on a holding company, boom, here's your tax savings, right? That's not exactly how it works, right? The value really comes from the separation itself, right? How, if you think of tax savings, one immediate tax saving that you're gonna see, it's on the opportunity cost or what could happen down the road if you don't do this. Because the unfortunate truth is that where as a business owner, you're exposed to, like I said, lawsuits, problems, and it happens every day. So if you're not prepared for this, if you're operating your business on an ongoing basis where you're either not protected or you're not even, let's say, saving for what, having cash reserves for some unfortunate situation where you actually might need cash or might need money to pay a lawyer, an attorney to represent you, to defend yourself on a situation like this, then if you don't prepare for that, then it's going to cost you a lot of money, right? So is it saving taxes directly? No, but indirectly down the road, it can save you a lot of problems and therefore, taxes, right? So what is the real value? So the real value is structure, right? Flexibility. Why flexibility? Because if you have the two companies, there's more things that you can do, right? By separating it, you're not commingling everything. It's all kind of a mess and chaos and chaotic. If you separate them, you can kind of you can have two things, right? So with the flexibility comes the organization, right? Because this is all part of a concept of organization to keep things separated but also organized. Okay, risk management. Obviously, you're already throwing out a potential. It doesn't mean that you might not gonna get necessarily get a lawsuit, especially if you haven't done this properly, right? Because there's another thing with the implementation of this, right? Because it's not just opening up a holding company and that's it. You obviously have to put ownership of these things, make sure they're owned correctly by these assets. The company has to be created correctly. It has to have an operating agreement, its own bank account. If it looks too much like you're the owner and the only owner, and you're not, if it doesn't look like a real business, and if you don't treat it like a real business, the IRS is not gonna give you the respect to be treated like a business. Okay, and obviously there are tax planning opportunities around this, but especially down the road, right? Because like I said, with the organization, with the flexibility, with the organization, then you can start setting up strategies, right? There's plenty of strategies that you can use. There's if you've heard of an accountable plan, right? You can do certain strategies. You can even do, if you set up this company correctly, you can deduct a lot more, let's say, insurance expenses that other entities don't allow if you set this up correctly. So there's plenty of opportunities of things that you can do, right? So everything depends on the fact and by doing this correctly. That's why it's very important that if you're gonna do this strategy, that you do it with the right type of advice, with the right type of recommendation, like setting it up with the type of with a professional that is done it before, that knows what they're doing and has a plan for you. In my practice here up from CPA, we've even had situations where some of our clients have set up a holding companies with an attorney without a tax let's say background or a tax implications in mind, and we're not done correctly. We actually had to meet up with the attorneys after to redirect certain things because they weren't set up in a way that they would actually get certain tax benefits if they were done right. Okay, so most attorneys may be aware of this, but an attorney doesn't automatically put you in a situation where they might know the tax implications. They might know the law, and they could be really focused on that part, but they can be done also not only with that in mind, but also looking at the whole tax perspective of it. So make sure that when you talk to an attorney and you set this up, make sure that the tax situation is obviously kept in mind, right? So who should consider this? Okay, so this is one of the most important sections, right? Not every business needs a holding company. Very important, right? So as I mentioned earlier, right? So let me throw a bunch of examples out there. Let's say you're starting a side hustle, right? I mean, you're just starting out. You're barely off the ground. It's just basically starting some ideas, starting with just a few clients. You don't have anything to own, so it doesn't make sense to have a holding company. Okay, if you're running a very small operation, it's another one, right? Testing a business idea. Right, so kind of all very high level stuff. You're not at that point where you've kind of crossed that bridge where it was from, okay, I'm gonna scale and I'm gonna grow my business, to I'm already there. I grew my business. I'm almost at the top of the hill. So now, what do I need to make sure I protect myself so that I can stay here? Right, that's the key. The conversation goes from, once you're up in the hill, the conversation goes from, should I own multiple business, right? Do I have the assets to do this? Does it make sense? Is my net worth growing, right? That's another important one. Do you have employees? So these are the type of questions that you start asking yourself as you start growing. If you start already kind of getting there, it might make sense to at least contact an attorney, at least contact a CPA that you know, that you're familiar with, that you trust, to see if you're at that point, right? Do I have a liability exposure? That's gonna be your first question, right? Is my business exposed at the moment? Am I at that level where if something happens, they can go after certain things for me personally? That's one of the main questions you want to ask yourself, right? So it's no longer about how do I grow, how do I get there. It's more like, how do I protect myself, right? That's the key to answer, that you need to answer if it makes sense to have a holding company. Okay. So lastly, I want to talk about the common mistakes. Okay, so what have I seen here in my practice? What are some of the things that we've seen from clients and prospective callers that I've called, and we have discussions about this, right? So one of the biggest mistakes I see is creating entities with no strategy, with no strategies. Okay, so this is the number one issue I see. As I mentioned earlier, I had one client this week that met with an attorney and spent a considerable amount of money on setting up entities because they're at that point. Okay, obviously I'm not going to mention names, but they were at that point of their business where they grew enough. They actually were making, they were already at that point in the hill where it was like, okay, so this became a bigger monster than I thought. Like it was actually a very admiring story, because he was, it's a business that started like with a very simple idea, okay, and it just took off like overnight. It was almost an overnight success. Okay, it happens. Most business don't become overnight. They actually go through long periods of struggle, maybe of ups and downs. But in this case, this company, they just took off overnight, right? They were at that point. So they met with an attorney. They came to us, and this thing was a mess. Okay, so the attorney obviously had the law aspect really taken care of, but the tax implications of what they created did not match what was actually part of the business. So this is where there needs to be a goal in mind, and that makes sense, both on the law perspective and also on the accounting perspective, right? The number two mistake that I see is just making decisions out of TikToks and YouTubes. I've said this a lot in most of my videos to avoid that, okay? Usually in those videos, including this one, we're not giving tax advice to you specifically. This is more of a, high level kind of, just going over certain things. But you should if this is something that might make sense to you, what should happen is you should contact your CPA or your attorney just to see if that makes sense, right? And also, so another one that I see is that, certain people think that, just by creating this, this automatically creates a shield for everything. Okay, so like I said, all of this needs to be created correctly. It needs to be set up in a proper way. Otherwise, you're just throwing money away because you're not doing this correctly. Okay, I've seen this. It's very heartbreaking when people have actually spent and made an investment on these things, and for whatever reason, it's just done halfway, and it's just created so many more problems that they could have solved. Okay. And so, another big one that I see is, focusing entirely on taxes and then ignoring the risks, right? And this is where, someone might come in and say, okay, so, I get all this, I get the asset protection, but, I'm actually looking for that magic bullet where, I want to see exactly how much this is going to save me. And, you're prioritizing like a short-term, let's say, expense on the risk of, having a long-term plan that is actually going to create the protection that is going to be able to keep you growing and to be able to keep what the business that you've created, right? It's nothing more heartbreaking than put yourself in a situation where you've actually worked really hard, had a great idea, made it work, made the sacrifice, took the risk to make a business grow to a point where it is actually a profitable and growing business, only to see it go away just because of not creating this protection that is that you need and that every business needs to be able to maintain it. Okay, so so the real lesson is like, at the end of the day, holding companies are not really about tax. Okay, as I think I kind of made that point clear. Okay, they're about having maturity. Okay, that's very important, right? So they represent a moment when a business owner starts thinking differently. Okay, this is when you kind of already grown from that, and it's all natural, right? When you start a business, you have just one focus, and this is where I started this video. You just have that one focus, growth, right? Sometimes it's a little bit different to make. It's a little bit difficult to make that bridge from, okay, I've grown. Although growing might still be there in the as part of my goals, because I may want to grow this to exponentially to whatever goals, long-term goals or ambitions I have, but it is not the number one goal now, or it might be, but you may have to have a second goal, which is to protect it, right? Because otherwise, you might just be kind of just exposing yourself for nothing. Okay, so it's not just about making money now. It's about paying. It's about paying less for taxes, number one, and it's protecting what you built. Okay, so if you've reached that point in your business, right, where you have investments, where you have personal assets that are growing, right, it may be time to evaluate your whole structure. Okay, does it make sense to keep my business under the same ownership? Am I at a point where it might make sense to have that asset protection? It just not to create a problem, but to actually solve. Right. This is what you create before something happens, right? This is how you kind of just get ahead of the curve. Now you say, okay, so I've already reached this point. I am, I've committed to this business. As part of that commitment, I'm going to make sure I protect it. So that's it from me, folks. I hope you found this to be helpful. If you have any questions, comments, please feel free to put any comments on the comment section. We'll be happy to, if you have any questions, to get back to you. Here at Upfront CPA, we offer free discovery calls if you're thinking about, making a switch, or if you're a part of a business and you're considering doing certain things, we do offer that for our folks. So, hope you found this to be very educational, and we hope to see you again soon. Please make sure you hit that like button, and we'll see you on the next one.